Maybe a critical week for tech and the internet sector. A number of major companies set to report. Joining us now for a look at what's working in the sector, Stephen Milanovich, tech strategist at Wolf Research. When I said maybe it's easier to talk about what's not working, it's because so much has worked. Steve, there's a piece in the Journal today about, you know, when you got to manufacture a newspaper every day, you always have to say something. But we've been hearing this all along. Investors' current rush to momentum stocks is worrying skeptics, as if they haven't been worrying all along, who fear that the seller returns could reverse suddenly. I guess that's always possible. They mentioned Tesla, but I mean, even the old line, real, well, not to say Tesla isn't, but things like Microsoft. I mean, even that company, the stock has just been incredible, Amazon and others. Do you expect the performance that they report not to live up to where the stocks are?
Well, as you know, Joe, tech's had a big run, particularly in the second quarter. It dramatically outperformed the market, led by e-commerce in particular. So there is some risk going into the quarter. And we've also got less guidance this quarter than we've ever had perhaps before. However, as I did my checks of resellers and so forth, it seemed like most companies probably made expectations, many of which were lowered after the first quarter. So I think we could actually get reasonably good reports. We've got Microsoft, Intel, IBM probably a bit on the weaker side. And the fact is, as COVID comes back, it's negative for everything, and that could cut into IT spending, which is probably down this year, but in some sense, it kind of bolsters the story for technology. So it's still a little bit hard for me to see what the catalyst is that's really going to send some of these highest multiple stocks down.
I just wonder whether just hitting some of these expectations is going to cause people to say, see, we were right to be in these. Do they need to, typically they need to outperform to get, you know, to even maintain the level of their stock prices. Do you think if they just are able to sort of carry through this period with you know, results that are about in line, will that be enough to keep them up, or are we headed down in that case? Like for Microsoft, for example, do they have to have a big beat, or is it going to be okay to just hit their numbers?
Yeah, I mean, they might need to have a little bit of a beat given where the stock is. I think the stocks that are probably more sensitive to that are some of the software names and internet names, particularly some of the mid-cap names. The stocks this week, I think if they come in line, generally could react fairly well. Intel, for example, we're looking to see if cloud spending is going to be strong in the second half, which I think it probably will be. In Microsoft's case, you're likely to still get good numbers out of its Azure cloud. And the question is, what are they going to guide revenue for the next fiscal year? The street's looking for high single digit. I think if they do that, maybe the stock sells off a little bit, but I think it's fine. If they surprise people with double digit expectations, the stock may actually go up. Microsoft's a tough one to be a bit skeptical of. I think the ones that could play more into with high expectations report over the next few weeks. This week, I think we will have, you know, reasonably decent reports.